September. We've been working on this for about 18 months, and we just launched in New York. We're going nationwide throughout the course of this year. We recently announced a second state, but we hope to cover most of the population of the US during the course of 2017. And Lemonade is really a new kind of insurance company, and we are an insurance company rather than a broker. So this is a company that does everything. We're vertically integrated, a full-stack insurance company licensed by the Department of Financial Services in New York. And I'd like to explain to you a bit about why we decided to become an insurance carrier rather than providing technology to insurance companies. Now, neither myself nor my co-founder knew anything about insurance. We're still learning. We've been in tech for 20 years. But when we encountered insurance, we found a sector that is vast, both in terms of the trillions of dollars in which it's measured and the fact that it's universally consumed, but more interestingly, unspoiled by innovation. We sell homeowners insurance, renters, condos, that kind of stuff. The top 10 homeowners insurance companies in the US have an average age of 104. This is a sector that is a vestige of the Industrial Revolution and has pretty much ignored every revolution since then. So finding such a huge sector that is unspoiled by innovation was pretty exciting. But you say, hey, if it ain't broken, don't fix it. Problem is, it's deeply broken. This is one of the least loved sectors in the financial world. In fact, in any world, they score lower than second-hand car salesman as a sector. And that's perplexing because it's a social good, and yet most Americans perceive it as a necessary evil. So why is that? What is the root cause? And technology is a big part of our solution, but what I'd like to share with you today is that there's a lot more than technology. We talk about ourselves as being based on artificial intelligence and behavioral economics, and really going back to first principles to rethink some of the foundations of the sector. And our journey begins 700 years ago with a gentleman called Francesco. Francesco was writing to his wife in Florence 700 years ago, and this is what he had to say about insurance. It is sweet to them to take the monies, but when disaster comes, it is otherwise. Each man draws his romp back and strives not to pay. Now, I confess I don't exactly know what that means, but I think you get the gist that he's not very happy. The insurance companies are good at taking the money up front, but are less good at parting with it when the claim comes. Now, it's okay, 700 years ago, Europe, everything's different. We're in 21st century USA. And then you go to the Urban Dictionary to get a sense of what people think about insurance today. The most voted upon definition of insurance in the Urban Dictionary is this one: a business that involves selling people a promise to pay later that are never fulfilled. Paraphrasing Francesco with a 700-year difference, and then for good measure they add the use of the word. Goma paid flood insurance premiums for years, but then the insurer decided to go out of business when the flood came because management had spent all the premiums on hookers and private jets. So rather than me talking about the problems of the industry, you just go into Urban Dictionary and get the pulse of the people, and you get a sense that there's something profoundly wrong. And this malaise runs deep. And in fact, it's hugely costly. In polls, 25% of Americans tell pollsters that it's okay to embellish claims in insurance. 25%. I think the other 75% were brought up not to admit that kind of thing to strangers. But at any rate, the question is, why is it that people feel entitled to defraud insurance companies? And this isn't hackers from the Ukraine breaking in with stolen credit cards, it's us. It's us in this room. When we come to make an insurance claim, we feel entitled to do stuff that we wouldn't otherwise do. Professor Dan Ariely has been researching this for the last 10 years. He's our chief behavioral officer. He wrote a book about this. There's a movie about this. And he concluded that if you set out with the intention of creating a system to bring out a worsen humanity, it would look remarkably like an insurance company. Hence the need to really try and invent things from the ground up. So let me show you a sped-up version of our demo. This will take 3 minutes, and if time permits, I'll tell you a little bit more about what's going behind the scenes. But this is a real demo of what's live today in the state of New York. It's a matter of great pride to me and the team that Lemonade is actually a B Corp. We incorporated as a company that's not just about profits, although we're backed by Sequoia and Google and people who expect a financial return. So we're definitely about that, but we're not just about that. And this for us is not really paternalistic giving, it's enlightened self-interest. Our underwriting profits go to non-profits. And this is where the business model innovation comes in and complements the technological innovation that you just saw demoed. Insurance companies are in conflict with their customers. Every dollar that I can deny you in a claim drops directly to my bottom line. And that kind of conflict of interest runs deep and begets you the kind of ill will that has been plaguing the industry for at least 700 years. What we've done is we've taken a different approach. We said, you know what, we're a tech company. Yes, we're a licensed insurance company, but spiritually we're out of Silicon Valley. We're going to take a flat fee, never more, never less. We take 20%. You pay us $1,000 for your homeowner's insurance, 200 of those dollars are ours, and within those $200 we have to pay all of our costs, our fees, our profit, everything is within there. If there's money left over after we've paid back claims, we're going to give it to charity. Why don't you tell us which charity you'd like us to give it to? If there isn't insufficient funds, we've worked with reinsurance partners, and they're going to have a bad year, but we've actually insulated ourselves that we take a flat 20% fee, and therefore we're never in conflict with our customers. That brings out the best behavior in us, and we're able to pay claims instantaneously. We made a bit of noise a few months ago when we said we broke the world record. We paid a claim in 3 seconds. Somebody pressed submit, the claim was analyzed, the claim was approved, the claim was paid in 3 seconds. We're doing that daily now. That is par for the course. Now, to get there, you need not only profound AI and deep technology, but you need a level of trust that is entirely absent, and you need a motivation to pay. You can't be in conflict with your customers. So this is our model. We take a flat fee, we pay claims, and we give back money to a cause of your selection, bringing out the best behavior in us and hopefully the best behavior in you. Thank you all so much.